haven't been doing any live trading this week. I've been on holidays. I've been taking some trades here and there. I just want to showcase an absolute amazing day that Wednesday was. Wednesday, July 30th. Okay, now it was actually, I believe it was non-farm Wednesday, and I'm never too quite sure about the Wednesday, how it's going to be. I know the Friday is trash, but I want to show you like some textbook ICT trades. Now, I'm not claiming I took all these trades. I only took one quick one, and I'll show you that. And I'll show you today's trade of the day. So yesterday, the first thing that we're looking for with our concepts is a run on liquidity. So here, there was news at 5:30. This is the high of the news. That's called the data highs. Came up right at 628. Let me mark the macro in for you too. Market came up at 628. Cleared the liquidity from the data. We have our clear of liquidity. We have our displacement, and I'll show you where. Here's the high, the temporary high. And here's the low. And then here's the temporary high right here. And here's the low right here, the temporary low. So this being the mitigation block. You have displacement over this low, and then you have your entry right here. Or I waited till 643, close enough to macro. Now, I gotta stress this. Before it came into this fair value gap, okay? Here's your entry actually right here. 2 minutes before macro is okay for me. Here is your SIBI right here. If the low had broken this low right here, it would not be valid, okay, to take it in this fair value gap. But price came down and didn't break the low here. And that's why this fair value gap here was valid. Now, I had a tight target. So my target in this case was these lows right here, which is the low of Tuesday. So this is Wednesday's trade. This is the low of Tuesday. We actually ran liquidity on that, and that was actually my target. It came down and hit my target and filled it at 66, 67 points. Then this is how it's so textbook, okay? Then you have, which I did not take this trade, by the way. Once I get my 60 points, I'm out for the day. So I was out right here. But you have this run on liquidity here now, and you're still in macro here. So we have a market structure shift here. We also have a displacement over it. Okay. This candle didn't displace, and this one displaced over that high. So we have displacement, but price never returned to this fair value here. So then we cross over the 50 here. Then we have this other candle, okay, because we don't have a fair value gap yet. And I didn't want to get into the supernova right here in case it came back down to the fair value gap that I have boxed in for you right here. So if you got in, say, right up here on this, well, actually, it's not even a supernova anyways. There's no 3 consecutive. So my point is invalid. But this, you have this displacement up. You have another market structure shift right here. And the fair value gap is here and here. So the way to take this trade is, if you get in right at that wick where you're supposed to, beginning of the fair value gap, and the market comes to this fair value gap in here, you're stopped out at 30 points. So you can put your stop loss outside of this box, but now you're looking at a 35-point stop, which I don't do. So in this case, what you do is you GAN box it. So you GAN box it as such, right? And I already have my 50% marked in. So what I do is I just measure, and if it comes back to the 50% mark, which is that white line right here, can I get my stop loss outside of this box? And not only can I get it outside of the lower fair value gap, I get to the bottom of the low of the candle, right? which is still a 29-point stop. But you can see if you took this trade where you're supposed to on the 50, you have a beautiful, you would target these highs over here. So you're looking at 80 points on that trade if you target those highs. So you got your 60 here, your 80 here. Now this just keeps going, right? Every macro has a winning trade. You had 2 and 1, not that I would take them all. So you have the following AM macro, which is right here. Now, okay, you're trading textbook in this 4-hour fair value gap. This is the second model, right? Where you need a clear of minor buy side or sell side liquidity inside of a 4-hour fair value gap. So you have it right here. And you can see that we displace lower before the macro begins here. Here's your high right here. Here's your low. Here's your high. Here's your other low. Temporary high. We have displacement over this low right here. And you can see we enter the macro right here on this green line. Price comes up into this fair value gap here. And then we have your stop loss would be on top of this candle. And then also, guys, this is when you pump the leverage, right? When you only have a 15-point stop, you double your leverage because it's the same thing as having a 30-point stop, right? So you don't risk less, you risk the same amount, and then use the lows. So these equal lows right here be your target. So, here you got a beautiful 1 to 4, 1 to 4.5. You only risk 15 points. This is the 50% mark right here in case price was bullish and wasn't going to take out these lows down here. The other way too is you could take half your position size off right here. So you jam your stop loss to break even, right? Take half your position size off right here and let the rest ride out to the bottom of structure right here. So another textbook trade, 2 in 1 macro, 1 in that macro. And then this thing just keeps going. Like, look at the supernova. That's why the supernova is so advantageous in smart money trading. Look how we take these lows out here. We even tap into a 4-hour fair value gap, I believe. And then we are in a macro. Now, you don't have displacement. You have this low. Then you have a high, low, high. That's the new high. Temporary low, market structure shift, which is part of the criteria. You have to have that in your list. There has to be a market structure shift, and there is here, and it closes over here. And in this case, it gives you the supernova entry here where it crosses over the 50. This whole run up to here. I mean, I wouldn't even target these highs up here. I would just target my 1 to 2. Because, you have these highs in this fair value gap once again. So right to here, 63 points, 60 points of 1 to 2. What a day. I turned my computer off after this trade in the morning. I'm going to showcase today's trade that I took. All right, you can see my arrows are still in where I took the trade this morning. So this morning, I marked in this minor buy side liquidity, which is right here, but I really should have labeled it the data high right here. We have our macro beginning right here. Okay, we've been on this downtrend here for a long time. So the continuation model is valid. It doesn't necessarily have to take liquidity out because you see the high right here. It actually tapped into this fair value city over here. And here's the first fair value gap presented. And if you can see with my issue of taking any of these fair values, we broke these lows. Very important factor, guys. Like if it breaks the low of the range like that, it's not a valid fair value gap. These lows right here. And you can see it doesn't respect these fair value gaps. So this is invalid fair value gaps. Even though it's the first 1% of the day, there is no longer a continuation model. Now, sometimes it's a little bit tricky. The range is tight and you can do it. But in this case, remember also that this is a 6:30 a.m. candle. So that's the low of that's the opening low right here. So it's a big deal for breaks. It takes, and then my entry, let's erase that so you can see. Anyway, so you have a push up, you have a high here, and then it makes your temporary low right here. So now you're looking for displacement over the temporary high, which is right here. It displaces on this candle right here, leaving this fair value gap right in here. This fair value gap right here. Now you can see that price never returned into this fair value gap right here. It did, however, return into the upper one, and that's the one that I use because you also have a supernova entry, 1, 2, 3 consecutive within 10, crosses over the 50. You can see where I took it right here. These are the equal highs. I actually kept the 30-point stop with this one. I could have tightened it, but there's a tiny little fair value gap here. It's right here. This is the breakaway gap here. So you never know if it wants to come down and wick it and leave. So I kept my stop below, and like I said, I target these equal highs up here in case it wanted to come back down to my entry before it took this high out. We've seen a lot of that action lately. So this was a clean 1 to 2 right here. So I just wanted to show you my trade of today and yesterday, and I'll be back live trading next week when I'm off holidays. All right, have a good day, guys.